Sasan, good morning. I was just talking about how in the past, Intuit seemed to live and die by the tax quarter, but not so much this time. So I want to ask you about tax first and how that went, but also give me your take on this $141 million settlement that Intuit has paid out. Admitted no wrongdoing, but the issue was steering people away from truly free tax services. What has Intuit changed, or what are you changing coming out of that across the company? What if anything, did you learn from that?
Well, good morning, John. Thank you so much for having me. I'll start with the first part of your question. Taxes, both consumer tax and our pro tax business is now about 30% of the company. So we're truly a platform company that's very, very diversified, and we're very pleased with our performance and progress this tax season. And in fact, we hit a significant milestone with our TurboTax Live platform, which is in essence where we have experts to help you do your taxes or do it for you, where we reached $1 billion mark, growing at 30%. So we're very excited and privileged to have the honor to serve our customers. Specifically, your question around the settlement. One, as we've said in the past, we are huge proponents of free. Over the last 8 years, we have served about 100 million customers that have paid nothing to get their taxes done. In fact, those figures are the largest of the entire industry combined. And we felt that some of the complaints about our free practices had no merit. But with that said, we felt like this was important to just put behind us. And some of the, by the way, practices we had evolved in the last year just to continue to be far more clear and transparent with customers in terms of their eligibility for free and when they're not eligible for it. So I would say those are the headlines.
Okay. Now, I do want to talk about small business because it's such an important engine for the U.S. economy overall, and that performed quite strongly for you and is a big part of why you issued this strong guidance. In what ways are you seeing this inflationary environment, higher costs reflected in small business performance? Why isn't it slowing you down here, and what gives you the confidence to issue the guidance you did, given all of that?
Sure, John. First I'll start with the small business, and then I'll talk about our performance. In terms of the small business, everything that you all talk about, throughout the day, is very real. First of all, consumer spending is still strong. So consumers are spending with our small businesses for the services that they provide. At the same time, small businesses are having to deal with, food prices going up, fuel prices going up, wage shortages and wages prices going up. And so those are very real things that they have to deal with. At the same time, the reason for our strong performance last quarter and our guidance going forward is, there is an accelerated flight to digitization to manage your cash flow. One of the top reasons why small businesses survive and thrive or go out of business is, one, getting customers, two, it's their cash flow. And on our platform, our platform now is a growth and money center platform where you can do a far better job managing your cash flow, get access to cash. And in fact, what I shared on earnings yesterday is this last quarter, our QuickBooks Capital, which is our loan product, tripled year over year. And our payments charge volume continued to grow north of 30%. And those are just indications that small businesses are relying on our platform to be able to manage their cash flow, even in unique times. So we're proud of and privileged to be able to serve our small businesses.